While banks offer their clients loan payment holidays and other relief as a consequence of the COVID-19 lockdown, it's important for customers to inquire with the small print of their credit agreements or directly with their financial lenders as to whether they have credit insurance. This will save bank clients from paying the extra interest that would come with getting a payment holiday, because even if you do get a payment holiday, you will still end up paying more. Well, to tell us more about this, I'm joined on the line by Kagisho Mahura. He's a financial advisor at Gradidge Mahura Investments. Thanks very much for joining us, Kagisho. I hope you can hear us very well. Are you able to hear me?
I can hear you.
Okay,
super.
Super.
I can hear you loud and clear. Can you hear me?
I can hear you, yes. So under what circumstances do you feel that consumers should approach their banks for the payment holidays that are being offered by a number of them?
Yeah, good afternoon to the viewers as well. I think what is important for the viewers to realize is that these payment holidays are not a freebie. You know, it's going to cost you money in the long term. So only the viewers that have absolutely no way of repaying their monthly installments should actually be taking advantage of this. So if you've got no salary at all, or you've got a significant reduction in your salary, I think those are the people that should be looking at taking the premium holidays. But if you have got your salary and you can afford to keep paying, those listeners and viewers should continue to pay their monthly installment.
So in terms of the actual the credit insurance that's available, in what instances will people have that type of insurance?
Look, as the name suggests, insurance, the credit insurance is cover that you get when an insurable incident actually occurs. An insurable incident is whether you're disabled or you die, or in this case being retrenched. And what the viewers need to understand is that there's basically three areas that they need to be able to demonstrate loss of income in. One, it could be that you have an outright retrenchment, which is a compulsory retrenchment, or two, you've been put on short term, that is, you've got reduced working hours and therefore reduced income, or three, you've been placed on unpaid leave. So those three will probably constitute what is a plausible claim under credit life insurance. What is important with all three of them, is that you must make sure that it was actually credit life insurance that you had in the first place. Either you took it out overtly and openly, or it was actually included implicitly in the premiums that you were paying while you were paying your monthly installment with the bank.
And in terms of time, for how long can people get this cover for? If, say, you're a freelance worker, but, you know, obviously you're not going to getting paid during the lockdown, but you get the opportunity of work in May, would you have to disclose that to your insurer so that they only cover you for the period that you were unable to earn an income? How does it work?
Look, the length of the period that will be covered will depend on what your particular contract states. Generally, these covers go up to about 12 months. So you've got to look at what your credit life contract itself actually said. So sometimes they will match the number of months that you were experiencing the loss of income. Sometimes they'll be longer, which will be a blanket cover that says as soon as you have submitted a particular claim, they will pay the premiums for that 12-month period. So it's difficult to answer on a global basis, because you've got to look at your individual circumstances, even as a freelancer, to say what are the things that have caused your loss of income, and therefore can you qualify, and for what period of time.
Kagisho, thank you very much for your time, sir. That was Kagisho Mahura. He's a financial advisor at Gradidge Mahura Investments. Diabo, it's over to you.